Hello, hello. Good morning, people. Oh, a little delayed here. Apologies for that. But, excuse me. A few things to talk about on today's session. Realistically, we've got interesting market movements over the past few weeks where volatility has been absolutely crushed. We've seen lower volatility aspect moves that have really bothered traders all in all, right? We're seeing swings here and there, but a lot of chop and sideways movement and rotations that are unbecoming of big opportunities in these markets, all in all, right? It's not necessarily something that becomes a wanted traded market, right? A market that is attractive to trade. And all in all, right, we'll talk a bit about that because in these specific market conditions, especially when VIX is super low, especially when you're seeing these like tiny tight ranges playing out, you're most likely going to want to take your base hits, reduce size, and really focus on key extremes of the market. One of the things that people have to understand is that as a trader, your job isn't to trade all the time, every day, whatever the case is. It's to understand that when the opportunity is there, you strike it. When it's not, you walk away and try to keep that at bay. I've reduced my trade size to 1/4 of what I normally trade over the last 2 weeks, trying to get in the swing of things and really focusing on not getting killed. So let's talk a bit more about that. But all in all, what we have here is some news about streaming partnerships, right? We saw that Disney reported earnings fairly recently. One of the things that we covered yesterday that Disney got a pretty strong beatdown, but there's been a lot of, I guess, uh, streaming wars, if you will, right, over the past few years. But things are changing fairly well over the past few weeks here. We've seen the formation of new alliances. Walt Disney and Warner Brothers Discovery just unveiled a new streaming bundle that includes Disney Plus, Hulu, Max, and Max. And the subscription will feature both Marvel and DC Universe as well as Star Wars and HBO. But they will be streaming. They will be available in the U.S. starting this summer. So in the backdrop, also Netflix, the once all dominating force of the streaming world, with studios happy to license their legacy content as they focused on core markets of traditional television and box office. As the barriers to entry of launching an online platform came down, the consumer viewing habits changed. Many companies decided to go along with it when their distribution deals came to an end. So, original content and original streaming platforms soon became the name of the game, with studios like the ones that we mentioned above. Investing significant resources to gain market share, as well as Prime Video like Amazon, Apple TV, Paramount, and Peacock, which is from Comcast. So, in recent years, companies have unveiled an ad supported streaming plans and password crackdown in an effort to attract subscribers, but it is becoming as much of a quality game as it is a numbers game. So, customers are also looking to downside their subscriptions, especially as the amount of streaming apps and packages has exploded. Many have already ditched their larger bundled cable packages, but there are also risks here and there to move into bundled streaming that could eventually produce the same effect that led the cord cutting. So this is a new direction towards choice and value that was heard immediately after the latest streaming bundle announcement. Suggests more consolidation might be in store for the industry. This new offering delivers for consumers the greatest collection of entertainment for the best value in streaming, said J.B. Perrett, the CEO of global streaming at Warner Brothers and Discovery. Don't forget that Disney and Discovery WBD, along with Fox, are scheduled to launch a joint sports streaming service as soon as the fall. So, as we see them bundling and getting closer and closer together, right, could spell boosts in revenue overall and seeing these stock prices go up. But that's not the main point of concentration that I've got for today's trading and the current trading that we've seen all in all. We've seen very slow movement realistically in these markets. And what we've seen this morning was the unemployment figures that came out. These unemployment figures that popped out help the market sustain some of the upside momentum, right? When we take a look at the S&P 500 here, the information that we're gathering from this is that we're trading in a new distribution to the upside, just pinging up and down, just pinging back and forth. And right now, as we cluster and create this heaviness of volume in between, right, it's a level from that 51.93 up into that 52.24 realistically. These areas, as we rotate through them, it's fairly tight, right? It's about like 30 points, if that. And everything that's getting traded within is adding to the thickness of volume that is actually within that. So when you add to the thickness of volume and you trade sideways in these areas, especially a tighter range, a tighter distribution, what happens is you decrease the probability of finding some kind of imbalanced movement that is in between, right? So the areas in between start getting tighter and crappier to trade, and you're better off trying to wait for some of these extremes. So realistically, into this low 90, there's a lot of volume that was created over the last few days. Volume starting to increase into these lows, and then into that mid 20 into the highs, where we've only traded once this week, but we've created a lot of volume to generate a push to the downside from there. So, excuse me, jeez, everything in between becomes low probability trading environment. It becomes an area between like 52.05, 52.08 that prices can struggle and chop around. And it's not necessarily something that I want to get myself into. Um, if we take a look at some of this delta, trying to identify where these imbalances are, realistically, when we top out in the market, we see a lot of buying that gets trapped into the highs. I'm not necessarily seeing that kind of advanced buying getting trapped into the highs, more so just like little sprinkles of it, but we're noticing that there's absorption into lows that keeps generating higher lows for the potential that we could see a push up. Right now, over the past few days, if we focus on how the order flow has been playing out, it has not been bearish, right? There have been bullish swings continuously. Buy side continues to buy higher and higher, and the lack of selling is allowing these guys to continuously try to press higher. So if I'm going to trade today, again, right, we're in a slower market condition. Volatility is extremely low. You look at relative volume, it's slower these days. The average range on the S&P is like, what, 20 points maybe the last few days, if that. And these market conditions suggest that you want to be taking your base hits. If you got a 4 or 5, 6 point winner on the SPOOs, you might want to just take that off and walk away, right? Trading smaller size, trying to not get killed and acclimatize to the current market conditions that you're being given is a huge factor in what's going on right now. And trading the extremes, trading the areas where the imbalances actually come about rather than getting sucked into these middle low tier levels is what's going to keep you afloat, right? When you have such low volatility in the SPOOs, for example, you can take a look at markets like the NASDAQ where you can have like 20, 30 point swingers, and those are going to be on the lower end of things. So keeping that in mind, right, tomorrow we're going to be going live on stream here on YouTube. So again, trading small sizes you've seen over the last several weeks, all in all, and we'll keep in touch about that. So there's no news realistically this week that was much anticipated. Next week we have inflation data, right, CPI, which could shake things up a little more. No Fed speakers this week. Well, I guess Kashkari didn't really provide too much volatility this week. So the lack of news, the lack of movement, reduce the trade size until we get back into the swing of things with heightened volatility, which could come out in the few following weeks. But until then, just be on defensive mode, right? If there's a trade, okay, take it, but don't overtrade. Don't look for many opportunities throughout the day, as they're even slimmer than regular. And just keep that risk management super tight as we get into this period of crap. So check out TradeProAcademy.com. Jump into our Discord community.TradeProAcademy.com, and I'll see you guys tomorrow. And we'll be streaming live on YouTube. So let's check that out.